people have this view that AI, the core platform, will take all the market. And I think that will not happen. Unlike enterprise, the majority of consumers will not develop their own apps. No matter how easy that is, there are people that will always buy other people's software.
Danny Cohen grew up watching Israel become a startup nation. Now, alongside Oren Charnoff, he's betting the country's next breakout wave will be consumer. Through Sticker Ventures, they're backing a new generation of Israeli founders, building profitable, globally minded consumer brands and apps designed to win far beyond Israel's borders. Today, Sticker Ventures is helping redefine what consumer innovation from Israel can look like.
Because we deeply believe the best distribution tends to win, not necessarily the best product in consumer. So we look for those types of entrepreneurs.
I think the reality is great marketing alone will not get there if the product is shitty, right? Because if they're just product people and that's all they are, they'll just never pass the first year into the real market.
Danny and Oren, thank you both so much for coming on the podcast. I am so excited to have this chat with you. How are you both doing today?
We're pumped.
Yeah.
Long time listener, first time caller.
Oh my gosh. Well, thank you so much for listening. I really do appreciate it. And I'm excited to talk all things Israel, all things consumer, and Sticker Ventures. So I'm really, really excited for this conversation. I want to, if you can give us like a brief history on the Israel as it pertains to technology and startup innovation. Why has Israel dominated when it comes to technology startup innovation from your perspective?
Sure. Maybe I'll take that because I was a little bit older, so I was there when I don't know if things started, but I was there when they emerged. Mike, I hope you're okay. You're okay there.
I'm good. I'm good. I'm great.
Great. Look, I think there are a couple of drivers that were significant for Israel tech. Probably the obvious one is that without taking sides or opinions, we live in a difficult neighborhood. We have a pretty strong military investment. And one of the things is that the military is based on technology and innovation. And when people leave the military, the IP that they develop or the knowledge is theirs. And usually they take that and create a wide range of products. And turns out that what is applicable in the Army is usually applicable to many, many other areas. And kind of the empowerment that you get in the Army transmits itself to a startup thing. So that is one. The other two, and we won't take much into it, but Intel, which was used to be the darling of Silicon Valley, they opened up an R&D center in Israel in the 70s, and that was the first of many of these R&D centers that started to come because of talent that moved from Israel to Silicon Valley and back. And that kind of open road between what used to be the only technology hub and Israel really generated later on R&D centers from Microsoft, and then later on Google and Meta and so on. So the combination of the military, these multinationals, and I think the third thing maybe is Israelis are very innovative and they always think their boss is an idiot and they could do a better job. So that combination together creates the magic.
Amazing. Yeah, I appreciate that summary. I don't know, or if you have anything else to add on this.
Yeah, I think the one thing is I'm an immigrant to Israel, and I moved in 2018 from the States. But for folks who've gone through the Army and then they do university, when they go to university in Israel is 3 years. It's like vocational university. There's less liberal arts than in the States, less mandatory classes, because you already have a lot of identity about who you are, what you want. But like people benefit from business school, you have the military network and then your university network. So you're really starting your career a bit older. And the last thing I'd say is people are willing to take way more risk here than in the States, way more risk. So the fear of starting a company that might not work, I don't know, that failure celebrated if it doesn't work out, but also people are less risk averse in Israel than they are in the States.
Is that just because it's kind of ingrained in the culture and also, the history?
There's one thing I always say to people: the word startup is a slang word in Israel. So we can sit in a dinner and you would say something funny, and I would say, "Oh, Mike, that's a startup." And we don't mean that from it's not really a startup, but it's really embedded in the culture. And I think that really defines that.
It's incredible. I know that, Israel has historically been a B2B market. and as well, also military too, technology for the military. What talk about like the moment that's kind of going on when it comes to innovation, and what is a specific unlock right now that makes you both feel confident that it's the consumer moment in Israel? So
firstly, Israel has always done consumer. Yes. Always. Israel is great at it. Just a couple of recent examples. $1 billion exits as of late. Oddity on the cosmetic side is a public company on NASDAQ. eToro on the consumer crypto side is also a public company in the US. Resident Mattresses, $1 billion e-commerce mattress outcome. Superplay Gaming. And that's all just from the past 18-ish months or so. But I want to talk about how this has always been the case. Maybe you're a customer, a shareholder of Fiverr, eToro, again, Lemonade, Hippo, Wix, Simply, MyHeritage, Guardio, Lightrix, Move It, Waze, Mix Tiles, Addicted, Resident Mattresses, again, Bubble Skincare, Nanit Baby Monitor, or if you're in gaming, anything from Moon Active or Playtika. These are not anomalies. But I think the thing that's happening right now is the momentum, the expert alumni, the newly minted angels, the repeat founders, that it's just, we see way more people building in consumer now than years ago, but we've always been building in consumer.
Do you think as well that there's a lot of, sorry, Danny, if you have anything to add on that, first of all?
Just, the Resident Mattresses one, I think, is a great example because people are not always familiar with it, but Casper, Purple, there were not great stories. Who won in that market was the Israeli version, right? Resident won. They did a much better job than the kind of U.S. comparables to it, and I think that reflects the quality of the consumer startups when they do emerge out of Israel.
Why did they do a much better job than the American companies?
Because I think they hacked it.
Yeah, a hack is totally the word. I think the Americans went for brand with a capital B, and the Israelis kind of with the outside-in perspective were just following the math. They weren't necessarily taking out Subway ads to establish brand in Manhattan. They were Google, quant, data science alumni who followed the math. So it was built fundamentally differently. So they outlasted and got to $1 billion of profitable revenue and were bought for $1 billion by the largest furniture retailer in the States called Ashley's. Hacking is the right word, Danny. Totally.
So they were honestly just maniacal in terms of their actual marketing spend and ROI and ROAS and what their overall CAC is versus sales.
Yeah, with no, almost to an extreme. Just driving through the numbers. And by the way, still today, Ashley Home Furniture, everything on the data, numbers, and performance marketing is done out of Israel.
Wow. Well, how do you think about that in your analysis when you actually talk to companies in terms of how much, even a marketing spend? Because consumer, usually a lot of money gets tied up in terms of marketing spend. When you're talking to founders and talking to companies, how do you think about brand awareness spend, for example, versus spend that actually leads to ROI directly?
I think when we look, our fund is Sticker Ventures. We're a small fund, and we come in usually early. Early on, its performance is the only thing that matters. Mm-hmm. The only thing, right? Our money, not a single dollar is spent on long-term brand. You hope that some of the performance marketing will translate to brand, right? That the product will be good enough that will translate to brand. But it's not the early stage money that we look on. Then it's only ROAS, ROI, LTV to CAC.
Makes sense. Or anything to add there?
So Danny was talking about the core numbers that we look at. We also are looking for them not just to be performance marketing quants, but also exceptionally financially literate as well. Something that Danny and I like to talk a lot about is we don't just look for ROAS. We look for founders who talk about POAS, profitability on ad spend. So people who have that language on day one is they have a contribution margin orientation, mm-hmm. And not just a purely performance marketing. But the power of performance marketing is the fast feedback loops. And so for these early stage hackers, you can get those fast feedback loops. And we look for both marketing and financial oriented metrics as part of their language.
what's also typically the route to market for Israeli companies? Is that typically day one that they're going into the US? And how do you think about validation since you are investing in the early stages?
Yeah. So first of all, we should say that when we invest in companies, they're usually Israeli based, but we target the global markets. So usually initially US, maybe beyond that. But Israel as a market is not interesting for us, exactly, Mike, for what you talked about. And in today's market, we push the entrepreneurs to go US day one. We're not interested in a pilot or anything done in Israel because we don't think that translation works well. Now, I'm telling you, the data is the most interesting input on what you have. It's so easy to launch in the US. You don't need to do anything. And the data can tell you the story. Now, I can give you an example. I was an investor in a company called Lightrix. I had an app called Facetune. The four guys got to 10 million in revenue without visiting, I think, the US in their lives, right? And they had unbelievable economics, good brand recognition, all of it. And it was all because they had good product market fit, and they did it all from their dorms in Hebrew University in Jerusalem.
That's wild. Anything to add there, Oren?
Nothing. Danny got it.
Why? That's really I appreciate that story about them getting to $10 million. How do you think? I know that when you talk to founders, when you're interviewing founders and kind of thinking about, hey, should we invest in this company or not? I know that profitability is maybe the number one kind of center that you all are thinking about. How do you balance profitability and growth? Because obviously you want the company to grow, right? And sometimes in terms of growth, that's why many companies are negative EBITDA and are not profitable because they're spending so much money in order to grow. How do you think about this balancing act?
So it's not that the companies need to be profitable on day one, but they need to have a profitability orientation, or that they understand that that's what they're building towards. It's not the growth at all costs like everyone likes to talk about. It's really, it's the unit economics. It's the CAC payback period. Like, these are some of the things that we want to hear about. They're not going to be profitable for a long time, most always. I think across our 12 investments we've made to date, I think we have one profitable company right now. And we're fine with that. But there, it's the exception to the rule, but that's because we're coming in at inception. But we're looking for the founders who are talking about that profitability early on.
I totally agree to that. And I think one of the faults that people had, especially when you look at 2020 and COVID times, is that they looked at non-profitable growth, meaning buying users that will never be profitable or buying cohorts that will never be profitable. It doesn't make any sense. It just has no value creation at all, right? So it's okay that the early cohorts are not profitable because you learn on them. But at the end, as you scale, you have to have a playbook where at some point you see profitability on them, because otherwise it just doesn't make any sense.
That makes sense. How, when you get involved, in terms of the early stage, do they have to have, for you all, there has to be some cohorts that are working, right? In terms of that you actually see maybe repeat purchase or if it's if it's a subscription that there isn't churn, right?
First of all, we invested in companies pre-launch. So I think for us, it's a little bit, it depends on the market. I think there are markets where we feel so confident about that we're willing to take that risk, meaning we know it will work. We know the entrepreneur is good enough that this will work. What do you mean it will work? Not this company specifically, but we have a strong conviction that this market is going to disrupt and the unit economics will work in that market. In that case, we're willing to invest pre-launch. But in many other cases, we won't.
Yeah, and when we look at some of these cohorts, it's not that the cohorts need to be profitable per se, but we want to see the steepness of their learning curve reflected in the performance of the cohorts. They ought to get better over time. If month 4 is bad, that's okay. But the next time a cohort reaches month 4, what did they do different as a result of it? So there's no omniscient number of X amount of retention, but it's mostly just seeing like the steepness, the agility of their learning curve. That can give us conviction that, okay, they are on a path to figure this out.
How do you build conviction in pre-revenue companies?
look, I think at the end, venture is all about two things, right? It's about market and entrepreneurs. And there are entrepreneurs in Israel that we've worked with before, that we've seen how they work, and we're willing to take pre-launch bet on those people because we think that they are great and they will figure it out. There are markets where we feel that those markets will be disrupted no matter what, and we want to have a bet on those markets. Does it always work? It does not, but it's usually the combination of those. The quality of the entrepreneur, the quality of the market. If one of them is interesting enough for us, we will make that bet.
So typically on the pre-revenue side, it usually is then second time or serial entrepreneurs that you're taking a bet on.
Usually that's the case. I think, Oren, correct me if I'm wrong, I think the only other exception that we had was we made an investment in the short drama space, where we saw this unbelievable number of entrepreneurs going after that market, and we decided that we have to have a play in that market, and we picked the team and kind of the story that we liked the most of all of them. They were all pre-revenue when we invested.
Yeah. Yeah, I was just going to add, across the 12 investments to date, we have 9 repeat founders, but all 12 are awesome and gave us enough confidence to invest. But yeah.
Is it more so, do you find it's more so a bit top down when it comes to making an investment in that these are the markets that we think there needs to be disruption or will be disruption. So we're going to try to find the best company that's in this market? Or do you find that it's a bit more bottoms up and you actually meet an entrepreneur, they're the one that kind of have the insight, and then you're kind of realizing then, there's a big opportunity here in this market.
I know for me through the years, it's I would love to think of myself as top down. I think it's mostly bottom up. The reality is that just we sit and people come in with stories and you go, huh? Wow, I didn't know such a market existed. Wow, this is fascinating. So I think it's much more bottoms up, and I think that's what makes this job so exciting and so amazing, especially on the consumer side.
Yeah, I think particularly, and again, I'm just projecting over the past year, right? Like we're literally finishing our fundraise like today, this week. We spent so much time focused on that. We've done less top down. It's been a lot of bottoms up. We're actually about to have our offsite in a week where we're talking about where we want to bring the top down in more. But I think that's aspirational. Usually it's reactive, and are we inspired and captivated by some founder and their insight that we try and do top down as quickly as we can. Like we have an investment in a property tax appeals business. We did not talk about property tax appeals, Danny and I, ever throughout our relationship. We have an investment in a company.
We should have spoken about property tax appeal. No, what a great topic.
Yeah. No, it's fun. We're active in the Yahoo Answers boards of property tax appeals, but we have an investment in a company that's creating apparel gaming challenges for teenagers, right? You get your virtual self and you have all these. Danny and I have not spoken about our AI avatars and apparel challenges for it. Now we do. So yeah, bottom up a lot.
How, I guess, once you get this insight, right? You learn this insight from the founder in terms of this market. How do you all then go back and kind of do your research in terms of sizing and see if this is like a real opportunity or not? Excuse me, sorry.
Yeah. So that first of all, it's a great question. I think one of again, I think I love it. I think it's interesting, but also a challenge in the consumer space is that, for example, in e-com, you meet a lot of companies. They may have e-com characteristics, but the markets are so different, right? And one of the things that we work on, we have an analyst that she does a lot of help from Claude and basically spit out kind of a 2-pager on the market early on so we can really quickly get to 40-50% understanding of what are the dynamics of the market. And then if it kind of passes that test, we double click on it, talk to people, do more research, but try to get like very, very fast a kind of crash course to get an understanding if this passes or not.
And also something that we really love to see is the power of consumer is the feedback loops are so fast. They are so fast. You can run performance marketing campaigns for a landing page competition to get a proxy and then add to cart. And even if they type in the credit card number and you waste the user's time, you're not committing fraud, but you have no product to fulfill, right? And then the credit card link, then it's broken afterwards. Like that type of proxy can demonstrate to us they are incredible at acquiring users, starting with top of funnel, and they will find something to build. It's less so that they're intellectualizing this in business school, but we've had founders who've come in and said, this is what we intend to test. And then 90 days later, we see how those tests have gone, and then we back them. So we can size the market academically, and that's good and that's important. But we build a lot more conviction in like what the founders have done to prove they can acquire users. Because we deeply believe, generally believe, it's an oxymoron, that the best distribution tends to win, not necessarily the best product and consumer. So we look for those types of entrepreneurs.
Got it. So you would say that you skew much more when it comes to, let's say, call it marketing versus product. You're much more inclined to invest in a very talented kind of marketing led business at the early stages versus a remarkable product.
Wow. Can I say both? It's hard what you said, right? Because I think the reality is great marketing alone will not get there if the product is shitty, right? But I think what we want is we want a future product that we believe in, but a team that has a marketing DNA. Because if they're just product people and that's all they are, and they do marketing 101, which is kind of the basics, they'll just never pass the first year into the real market.
I also think that the funnel itself will determine the product. When you acquire users, you'll understand where things are broken, so then you can further optimize them. It's not that you have this great product intuition per se, but again, the power of consumers, the feedback loops. It's not anecdotal data of a handful of B2B customers. You could acquire users and see how it changes over time when you change something in the product flow, not just in the marketing flow.
Yeah, no, that's fair. I mean, I was talking with one private equity investor recently, and he was saying he believes when he makes an investment, he kind of have two buckets in terms of what the superpower is of the company. Is it sales and marketing, or is it unbelievable product? And he was talking to me about how he actually made an investment and he thought that it was sales and marketing was the superpower. And then he realized, oh my gosh, actually it's the product that was actually the superpower that was driving it. So I'm just kind of always curious. And I know that there's never really one right answer to it, but if there is like a leaning towards, kind of companies that typically are sales and marketing led that are really, really great at kind of capturing people to try and experience the product versus others that are really great, just really great product people.
Agree. Superpower. We need a superpower. Without that, it's hard to invest.
Yeah, totally. So let me think. How do you think as well? Because I know you all invest in consumer technology and then also inventory businesses, right? E-com businesses, retail businesses, but ultimately inventory businesses. How do you think about that dynamic? Because the outcomes of these businesses, not even from an investor lens, but just how big they can grow, can be quite different. So how do you balance that in your portfolio of pure kind of software technology businesses versus ones that actually have like an inventory piece to it, or really that is the business?
Yeah, I think I would say this. When we started the fund, when we did our first kind of pitch deck before making any investments, we right off the bat, we said we want both because we believe at the end that both can generate great returns. By the way, the fact that inventory businesses may have lesser huge outcomes, I think you get compensated because the entry valuation is lower, so you can get good ownership at relatively small checks. So maybe overall, the title number is lower, but the return for us as a fund actually works out. I will say that when you look at the first year that we invested, as we raised money in 25, we did 11 consumer tech and only one brand. But now I think, especially with AI kind of taking off, right now our pipeline is, I think, 6 or 7 kind of really hot brand companies. So I think that number will go up dramatically in the next quarter for us.
And Mike, this is going to bring me back to your previous question. I'm generally like as Oren, as a part of Sticker, I tend to be drawn to more distribution-oriented founders on day one. Danny has way more room in his heart than I do on the product side. I appreciate it too, but I'm like, wow, it's amazing how quickly they've learned and iterated on it. Like that's something that really gets me pumped. Whether you're selling a physical product or a digital one, your feedback loops are fast and you can demonstrate demand and initial cost for acquiring them. That we think it's a similar core skill set that is pretty essential to be on the founding team. So we have room for both. We think it's the same founders who build something in e-com will then do something in consumer digital and vice versa.
Yeah. I wrote a post on LinkedIn on Gruns. It's spelled
Gruns. Yeah. I saw that.
Yeah, and two things surprised me. One, the exit was amazing, but it was surprising how little people knew about it in Israel. It just shows again how much there's room for us to promote kind of consumer in Israel, and the fact that there's such a huge opportunity because so many people looked at it and say, wow, we didn't know that's possible to do in these categories. And I think that's part of what we're trying to push forward in the local ecosystem.
What was your biggest learning from the Gruns acquisition? Obviously, it was an incredible outcome, but any learnings from you both in terms of that maybe companies to look out for, or different any kind of learning in terms of that outcome?
I would say I'll go for two things. The first one is it reinforced because you were talking about are the exits capped on the physical product side? Is the revenues capped? No, there have been 11 $1 billion liquidity events of venture-backed perishable brands in the past 15 months. Number two, there have been 18 CEO changes of publicly traded perishable businesses, be it retailers or brands themselves on the public side. That's an awesome signal for entrepreneurs that M&A is happening. So that just reinforced that. I don't know if I learned anything too. The second thing is from the Gruns founder, it reinforced one, he had a finance background, hardcore finance. He was a private equity guy before. Mm-hmm. So he was looking at the performance marketing from a contribution margin orientation on day one. And also there was a second mover advantage there. Their branding on day one looked like Athletic Greens, but yummier. So it's okay to just to not be the first in a category. And there he did have some product innovation to your point, Mike and Danny, about the importance of that, because he was not a performance marketer, right? He was a finance guy who came in with a better form factor. So it's a reminder that you don't need to be a distribution-oriented background to win. That's my ramble.
No, that makes a lot of sense. And what I wonder is, due to all of the M&A activity in consumer, if we're also going to see a lot more LPs or institutions, and as well as other or even tech VCs have interest again in investing in consumer brands.
I think the answer is 100% yes, but there's one reason we haven't talked about. I think look at consumer behavior in the past 3 years post AI. It has changed dramatically. Everything we do differently now. That means there's a new option for distribution, new products, new everything. And I think when such a huge change happens, usually new companies appear and more money flows into these markets. Look, that's our bet at Sticker, that this is what's going to happen. And I'm telling you, when we spoke to LPs as we raised Fund 1, they're all very intrigued and very interested. And I think a lot of them will make moves in 27 and 28.
Got it. That's really quite interesting. I mean, what's also your point of view when it comes to AI? I mean, I know that because even talking to consumer product companies, maybe one of the reasons also as well that might be a tailwind for consumer brands is AI, because I think it's hard to know what differentiation is in AI, whereas in a consumer brand, you know what the differentiation is, right? You see it, you feel it, you maybe taste it if it's or experience it, whatever what their product is. What's your point of view, and how do you think about investing in consumer tech today?
Yeah. I'll say two things, Oren. I'm sure you can add to that. One, I think people have this view that AI, that the core platform, ChatGPT or Claude or Anthropic, they will take all the market. And I think that will not happen, meaning consumers will use some stuff on ChatGPT, but there will be vertical products in AI categories that will win. The second thing, unlike enterprise, consumers, even though there's Lovable and God knows what, the majority of consumers will not develop their own apps. No matter how easy that is, there are people that will always buy other people's software. So even though people say, a to-do list, I can create that my own on Lovable, I don't know, 5% will do that as opposed to 1% 5 years ago, but 90% of people will not and will buy other people's products. And that means that there's still opportunity to create winning products in these categories.
Danny talks a lot about, right, this being like the third platform shift in his career. First was internet, second was mobile. And everyone thought, you can't build anything because AOL is how you access the internet. It's how you do emails. It's how you do messaging. And everyone thought the same thing. He talks about Google. Why would anyone ever build another business when you have that to search for everything? And he says the same thing for Facebook initially. Why would anyone use WhatsApp or Instagram or Twitter for stat? So this great unbundling, even that we saw in unbundling Craigslist and eBay, where each category became its own business. We're seeing that already for vertical AI use cases. Sure, you can use these generic platforms for generic opportunities, but we're seeing, and we backed some of these AI businesses for specific use cases that have incredible traction, hundreds of thousands of users or dollars in their initial months, because people are looking for a specific solution for a specific problem and not a horizontal solution for a specific problem.
When you all created your fund, Sticker Ventures, can you talk to us a little bit about the actual landscape when it comes to venture in Israel and the actual target companies? Meaning, do you think that there's actually a big gap that you're filling when it comes to pre-revenue or the stage that you're doing, or are there actually quite a lot of players?
So on the consumer, look, I was a long time general partner at a fund called Viola, which is one of the largest, most successful funds in Israel. And I think what happened, what I saw in the past 3 years in Israel is that, one, the ecosystem has become very much cyber B2B oriented, and that the local funds are looking for those opportunities more than anything. And the second thing is that the American funds that come to Israel, even though the American funds are very generic and look at all categories, in Israel, they want to look only at what Israel is known for. And what happened to that extent was that there was this community of consumer entrepreneurs that were not getting real traction with the local VCs. And I thought that we are the best team to go after that opportunity to create kind of a winning category. And that's kind of the whole reason we started Sticker.
It's amazing. Anything to add, Oren?
No.
I know we talked about this as well, but I know we talked about this previously a little bit, but we'd love to kind of dive in a little bit more on it. What's the case? Why do you think in consumer, Israel really produces world-class consumer companies that compete in oftentimes in the case of, mattresses, for example, win against, American companies. What do you think is the reason for that?
I'd love to answer it because I think about this a lot. I think there's three unique things. Firstly, we call the Israeli consumer entrepreneur like the full stack consumer founder because we can do product and we do distribution. The first, like I said in the beginning, is we often have this outside in perspective, so we follow the math. We don't have an anecdotal lived experience for why we think one specific thing, but we'll just performance market with no ego to come to some conclusion. I compare it to a quantitative hedge fund versus a qualitative hedge fund. A quant can trade anything. A qualitative hedge fund trader can't necessarily. Number two is, and this has been compounding over time. Google, Facebook, and TikTok are major employers teaching Israeli Unit 8200, the intelligence geniuses who come out of the Israeli military. They'll then go and not just do anomaly detection and cybersecurity, but ROAS optimization at Google, Facebook, and TikTok. So those have been major employers teaching everyone the performance marketing. And with our ad tech and gaming history, we have that. But we've been expanding what we do For 20 years, Israelis have been living abroad, staying there and or moving back. You have a bunch of immigrants like myself. So our cultural sophistication is higher than ever, right? We're born and raised on the internet out in Israel. It's not the previous generation that had socialist roots that was born offline. And also the ecosystem momentum is a big thing. We now have repeat founders, expert alumni, people who have been a part of those great companies we mentioned before, that we have the factory of not just good technical skills and like more of a cultural orientation globally that we've all enjoyed in the world, but we have best practices of how to run a consumer business. And that's a relatively new phenomena. I'll end off with a lot more people are building in consumer. 1 out of 5 new companies last year was a consumer business. It's huge out here. That's huge.
Love that. Love that. Danny, anything to add?
No, he nails it.
Is there any misconceptions in the Israeli ecosystem about the American consumer?
I don't know, Oren, what do you think? I don't know. Do you have a view? I will say this: it's the gaps are way smaller than they were when I was a kid. When I was a kid in the 70s in the U.S., I spent a couple of years in New Jersey. It was like we had one channel in Israel, black and white, and then you came to America with color TV. So the gaps were huge, and now they're not. But I'm sure there's still a lot of differences.
Yeah. I think one is again because like today everyone's born and raised on the internet, so I think we're all way more connected than ever. But I think that at times I think what people in Israel forget is how heterogeneous America is. It is so big. And there are these siloed, in Israel, just because it's a smaller country, you may think of, not the core or the largest population by definition being small, but it's just not the case between the coasts, political association, socioeconomic. There's a great business in Israel that's built a community of hundreds of thousands of users for people who like to do DIY crafting at home. I don't know if the DIY crafting at home community in Israel is that big because the country's small, but to have hundreds of thousands of users unpaid on this platform is amazing. We have another company. It's a company called Prism, and they're creating content for niche communities, tuna fishers of America. And they have huge users who are interested in the content that they're creating at Prism. And that's just a random example that you can't build a company around that in Israel. So I think in Israel, people forget that about America. It's heterogeneous and it's huge.
That's a great. Yeah, that's a great insight. You're absolutely right.
Thank you, Mike.
But okay, how did you two also come together and decide to actually raise this fund together?
Yes, sir. I was at Viola, as I said. I think Oren moved to Israel. We were introduced. He was at a different fund, so we kind of talked a little bit about B2C companies back then, and we became a little bit friends. And then he started a company, and he came to pitch me, and I was like so excited because I thought Oren was amazing. So I gave him a term sheet, and he didn't take my term sheet, so I didn't speak to him for 6 months. Which is a little bit annoying. But after that, we kind of bonded, and I a little bit kind of followed and mentored and kind of worked with him as they did the company. And what I learned was Oren was really smart, really kind of hardworking, and understands consumer better than any other person I met in Israel. So when I decided to leave Viola and start this fund, I called Oren. I said, Oren, I got to do this, and I got to do this with you. And we have this duo now.
Yeah. Why leave Viola?
Because I think funds are becoming, in my mind, a lot more vertical experts. And I think that consumer, especially in Israel, is not done right in these generalist funds. It doesn't get the love and attention that entrepreneurs need. And I wanted to create a home for entrepreneurs where they're not the sidekick, they're the real thing. Look, 25 years venture capital, I really had it in me, the idea that I create my own fund identity. And I was like, what, I'm just going to retire and not do this? and not do it with Oren. Oh my God, I cannot. Right. So
Mike, I'm going to let the love fest continue for a little bit. So Danny is Mr. Consumer. He's been backing consumer consistently for 25 years. It's a hipster move out here to have done that. And he's done that incredibly well. Lightrix, Minute Media, Topingo, Ruti, right? He's and Outbrain, a whole bunch of others in this consumer landscape that when he approached me, I'm proud of what I've achieved in like my young career. I still have a lot to do, but Danny's Mr. Consumer. So a lot of consumer companies always knock on his door. And now that there's a firm that also can compound on that because it's a sector specialist, was an awesome opportunity. So I said, yes, sir, when he reached out, totally. And also our relationship was stripped to like real vulnerability because we already had friction in the past, right? When ultimately I decided to take a term sheet from elsewhere, like that actually, it was hard, but a little bit like Kintsugi, like it like really brought us closer ultimately because we had gone through conflict before of disappointing one another.
Oh, wow. Interesting. Okay. Wow. That's yeah. I feel like that just brings you closer together when you've actually done that, gone through
raw,
that.
Raw stuff.
Totally raw.
Yeah, we have sticky answers. That's why we're stickers.
Yeah.
Fund one. What's your target in terms of number of companies that you actually want to deploy or want to invest in, and what typically is the average check size?
Oren.
Sure. We're going to invest in about 30 businesses, somewhere between 25 and 30, about 15 at about $500,000 and about 15 between 1 to 2 million. Those will be the sweet spots. Inception, early traction. We could flex up to a Series A, but we're going to do a lot at pre-seed and seed.
A lot of pre-seed. Got it. And then for follow-on, will there typically be reserves in the fund for follow-on, or is that going to be kind of like SPVs and that sort of thing?
Yeah, I think a little bit, but that's not the majority of the money will be in first checks.
Amazing.
A number of our LPs co-invest directly alongside us. So you call it like the sticker network can be bigger. And again, these are direct. So we've had on most of our deals, LPs co-invest or follow on. But yeah, no, it's going to be very, very, very heavy up front.
Do you also find that these companies that are kind of young in Israel, do you also find, because as you mentioned before, there's maybe a lack of capital at the very early stage when it comes to consumer because there's so many, even though Israel has experienced so many incredible outcomes, do you find that you're kind of pulling American investors as well to come co-invest with us, check out these companies and kind of bringing more capital into Israel as well?
Absolutely. And this was the playbook. I used to live in Silicon Valley 20 years ago, working for an Israeli firm called Gemini. And that was the playbook. The playbook back then was you raise money in Israel and then you try to bring the American money from Silicon Valley. It was only in the recent 5 to 10 years where Sequoia and Greylock really put people on the ground and started to compete with the local funds. And they do that on other categories, not in our categories, not on the consumer side. And we're now building on the network of all the B2C fund in the US. We write down every person that interviews on your show, Mike, and we have a big list, and we're trying to bring all of them to invest in Israel.
Also, for some of them, they're coming knocking. There's great firms, Point72, Mavron, a bunch of others who are showing up, actively getting into a bunch of deals here. Lyra Hippo just hired an Israeli partner because they want to access some of the ecosystem here. Andreessen's showing up. They just did their first B2C deal out in Israel at the seed stage. So people are knocking, but we're also knocking as well.
Amazing. So what I love about this, it seems for you all, it doesn't matter if it's an inventory business, doesn't matter if it's tech business. You don't think of it maybe purely like that. From that perspective, it's kind of looking at consumer holistically and not really kind of worrying in terms of what kind of percentages are and business models are. Yeah.
Where our bet is Israel consumer into America will win. If that happens, or when that happens, we're making a killing.
And is America always the first? Usually like the first market that a company goes into. I know you said previously that it's global day one, but is kind of US normally the target?
Yeah, I would say, we see many companies and some go Europe. Some reality is 98% go America first. And now we're at a point where if they don't, we usually want to understand exactly why they decided for some strange reason to go Germany first or Asia first. We would love to see a company that will sell initially into the Asian markets, but we don't see it. We don't have enough deal flow on that front.
Got it. How I know you have 12 investments. Congratulations. That's amazing. Is there a company that you wish you invested in? And I know that it's kind of early on with Sticker Ventures, but is there a company that you wish you invested in and didn't?
Through history or in the past year, or
you know what, through history, because I know that Sticker is very
we don't. Yeah, we'll use the next 3 hours. I missed in my career Fiverr, Wix, Lemonade, Monday. God, you name a great Israeli company, I missed it. I guarantee you. So that's been around too much for not missing all these good companies.
How about you, Oren?
Yeah. I would say it was mostly doing angel investing before I was an employee, proud of what I did at my previous firm, Hanaco. But there's a handful of brands that I totally missed out on. And what's really interesting is when we've gone back to entrepreneurs who we've passed on in our careers, everyone remembers if you've passed on them. Everyone remembers that. They may still love you and maybe they'll invest in the fund or collaborate in some way, or you'll invest in their next company, but everyone remembers it. And I remember that too as a founder. I remember anyone who passed on me. I remember that also.
Well, it's funny also just on the investor side too, because I chatted with an investor who I said, "Oh my gosh, you're in this company. Congratulations. That's amazing." And he goes, "Yeah, it's great. But we actually passed on them on the first time, and I wish we didn't." Like even investors remember that it could be even better.
Yeah, but what's interesting is Inventor, we're generally guilty most of admission and not omission, right? Like you just have to win a few times ultimately within a fund. So like we're primarily guilty of admitting companies more so than I think omitting them.
Totally, that's fair. That's totally fair. What's one book? If there's one takeaway about Israel and consumer that you want people to know, I feel like there's many takeaways we've already covered, but if there's one specific takeaway that you want people to know, what is it?
Israel is a powerhouse in consumer. Israeli entrepreneurs build these companies quantitative, following the data on day one. And that's a winning formula that you've seen and that is compounding. And there will be more massive global, primarily US businesses built by Israeli entrepreneurs over the next 10 years than the last 20.
Love it. So don't just think about Israel and B2B. Think about Israel and B2C. What's one book that for each of you, what's one book that's inspired each of you personally and one book that's inspired each of you professionally?
I'm going to ask it to you at the end, Mike. So get ready with your answer.
Oh my gosh. Okay.
Danny, go for it.
Go for it. First of all, you didn't ask that, but for anyone that did not see the Project Hail Mary movie, that is one of the best movies I've seen in the past 10 years. So that is, I got to recommend that on every conversation I have. But from a book perspective, the one book I really enjoyed, and it's a little bit kind of personal, a little bit professional, is a book called Tomorrow and Tomorrow and Tomorrow. It's about kind of, it's a fiction story about the gaming industry starting from the 80s and following all the way kind of 30 years. And I always feel that beyond it being a great book, it describes a little bit kind of my life in the tech world. So that's a highly recommended book for me.
For me, I'd say Harry Potter. It's probably the book that I talk about the most, that I think about the most, that I reference the most, even as an adult. So I love Harry Potter. Like it's just a cultural phenomenon. I reread it all the time. And professionally, if you haven't read Startup Nation, I read it when it first came out in 2009. It's a book on Israel's tech history. And like exactly what you open with, Mike, is why is Israel such a small population, a powerhouse with the most startups per capita, venture capital investments per capita, amongst the most publicly traded companies on American Stock Exchange, despite having a population sub 10 million. Startup Nation really helped shape that. I want to spend so much of my life and my career in Israel. So if you like business, it just makes the case for why it's so phenomenal out here, all the tech and innovation.
Love
Mike,
it.
what about you? What are the books that have changed your life at work and at home?
Books that changed my life. So the first one that's come to mind is Never Eat Alone by Keith Ferrazzi. It actually is one of the inspirations, I would say, for even starting this podcast. But for me, it's just, Keith Ferrazzi has some very, very unbelievable ways that he kind of keeps in touch with people throughout the book. If you've read it, it's like, it's pretty fun. For example, he asks everyone what their birthday is. And so he has just like, and this is back, I think, in like the late 90s or early 2000s. So there wasn't, really like using much Excel. I think it was, well, anyway, maybe it was using Excel, but he would call everybody in his contacts. This is like, thousands of people that he knew in his contacts, to call them on their birthday and try to leave a message like every morning. So it'd be like, if you think about it, it's probably like 100 people a day, right? And that's how he like started his day, calling people on their birthday. And just little kind of ways that he's done to build this network. And he has he has a phenomenal. He knows, some of the big political leaders. He was the youngest CMO at Deloitte, and just all the various ways that he's kind of been able to grow his network. I think it's really, really unbelievable. So I am not calling everyone on their birthday, although Oren and Danny, I would love to know your birthday. So maybe I'll start doing it. But just a really cool, this kind of makes you think a little bit more creatively in terms of connecting with people and building relationships.
Awesome.
Nice.
That's great. That's fantastic.
Yeah. Well, Danny and Oren, this has been so much fun. Thank you both so much for your time.
Thank you, Mike.
Mike, thank you so much. This was great.